So buying a home in 2025 is more stressful than ever, especially for first-time homebuyers, because it's one of the most biggest financial decisions you'll ever make. You're taking on hundreds of thousands of dollars in debt, often with zero room for error. And the truth is, most buyers make costly mistakes they don't even realize until it's too late. So in this video, I'm going to walk you through the top 5 home buying mistakes to avoid, especially in today's high rate and high stakes market. So whether you're buying your first home or it's been a while, this isn't your typical get pre-approved advice. This is real mortgage insights that can save you tens of thousands of dollars and tons of stress. So if you're serious about buying a home in 2025 and want to do it the smart way, this video is for you. So one of the biggest home buying mistakes to avoid is assuming that your pre-approval amount equals what you actually can afford, because lenders approve you based on your gross income, so the amount that you earn before taxes, health insurance, and retirement deductions, but that number doesn't reflect your real take-home pay. So let's look over the scenarios. Now, on a conventional loan, they will allow 50% of your monthly income to go towards your monthly debt. So this is how the lenders approve you and how the banks really qualify you. They take your gross income amount, so what you receive before taxes, which is not your take-home pay. So let's say you make $6,000 a month of monthly income. They subtract all of your monthly debts combined. So in this scenario, let's say you have $1,000 of monthly debt combined. This could be like car payments, student loans, monthly credit card bills, things like that. That will equal a residual income of $5,000. And again, because on a conventional loan, they'll allow 50% of this to go towards your mortgage payment, you divide that by 2, and that will give them $2,500. They will allow your mortgage payment no more than $2,500 a month. And here's the issue. Remember, this is your gross amount. So more than likely, you're really netting around $4,600 a month. And if you have a mortgage payment of about $2,500, that leaves very little room for you to save and for you to have pay for groceries, car insurance, things like that. It's gonna keep you what we call house poor, where you're able to make the payment, but you're barely able to save or really do anything outside of that. So a tip is make sure that before you even get pre-approved, know your budget up front. Come up with an exact monthly amount that you want to allocate towards your housing expense. And know that, again, before you get pre-approved, so that when you do talk to a lender, you tell them and they can base your pre-approval on that amount. Now let's go over mistake number 2. So when you're shopping for a home, it's really tempting to chase the lowest purchase price, but another big home buyer mistake to avoid is assuming that the cheapest home up front will be the most affordable over time. Because you have to remember that you are not a cash buyer, you're financing for a full 30 years. So those payments are stretched out for a full 30 years. So whenever you're negotiating, instead of just going in and asking for a price reduction, instead ask for a seller credit. This will help and be a lot more effective in lowering your monthly payment, because again, you're financing for 30 years. And here's how the math looks. So let's say we have 2 scenarios. So let's say you have a house for $400,000 and you're trying to figure out if you're either going to ask for a $10,000 price reduction, so the purchase price would then be $390. That will then lower the payment from $400 to $390, just about $154 a month. Now, let's say instead of lowering the price, you keep it at $400,000 and you ask for the seller to give you $10,000 to use to either buy down your interest rate for your closing cost or use it just as a closing cost credit. If you buy down your interest rate, that will save you almost $268 per month by doing it that strategy, then just lowering the price. And these are tips. It's important that during the home shopping process that you're involved with your lender so that they can run different scenarios like this and help you negotiate on what's going to be the best strategy up front. And before we go into mistake number 3, if you're planning to buy a home in 2025, make sure you hit that subscribe button so you get notified every time I put a video out. So another home buying mistake is only being prepared and only saving up for the down payment. Because in reality, you really need to have 3 different categories saved up. You need to have, of course, the down payment. You need to have, there are closing costs that are associated with buying a home that's on top of the down payment. And then you also need emergency funds, so funds left over after you buy the house, so you're not just drawing up all of your savings account and you have money left over for if things break in the house, you have a medical emergency, things things like that. Now, when it comes to the down payment, if you're a first-time home buyer, you need anywhere from about 3 to 3.5% for the down payment of the purchase price. So if it's a $200,000 house, 3% is about $6,000, 3.5% is about $7,000 saved up. Now, when it comes to closing costs, you'll need about anywhere from another 3 to 5% of the purchase price. Now, this varies a lot from state to state. It also varies if you're going to be buying down your interest rate, things like that. Now, the good thing with closing costs is you can actually ask the seller, again, to cover these closing costs, but that is a negotiation technique. Not every seller is going to be willing to cover your closing costs. So if you want to have the most competitive advantage in the market, you'll really want to have the closing costs saved up. Now, when it comes to emergency funds, you really want to have a good cushion of anywhere from about 3 to 6 months of all of your expenses saved up just in case something happens. Now, a tip that you can do as a home buyer, especially if you're a first-time home buyer, is you can get a grant or do a down payment assistance program that will help cover the down payment. Even if you already have it, if that down payment is going to wipe you out with the closing costs, it might be worth looking into getting a grant that will give you that down payment so you have money saved over. Now, you really want to make sure that you understand all of the programs that are available with you up front as a first-time home buyer, and that you know the pros and the cons of everything. So it's important that you work with a mortgage broker that has access to all the different programs and can help you decide which one is going to be best. Now, another home buying mistake to avoid is jumping into the process without a clear timeline, because most buyers don't realize how long the steps takes or what delays could set them back weeks or even months. So if you think that you can start today and move in next month, really think again, because credit prep, pre-approval, negotiation, closing, the process can take 60 to 90 days or much longer if something needs fixed. So here's the overall timeline. So really about 6 months before you want to buy a house, at least talk to a lender. Now, at this time, you're not getting pre-approved. You're just going to talk to a lender and see if there's anything that you need to fix now. So that gives you enough time to fix it. Then about 3 months before you're ready to buy a house, that's when you actually want to get pre-approved. You actually want to have them look at your credit, submit all your financial documents. Then from there, after you get pre-approved, with the pre-approval process can take anywhere from about a couple days. It's not a huge process as long as you give the lender everything that you can up front. Then after that, they'll give you an actual pre-approval letter, and then you can start home shopping. Now, home shopping can take you anywhere from 1 week, a couple of days, to up to 3 months. It just really depends on the inventory that's out there and what you're looking for. Then once you've found a house, you submitted an offer, you negotiated, you went under contract, really the loan process and under contract takes about 30 days. You can speed it up a little bit, you can slow it down a little bit, but generally speaking, it takes about 30 days for you to get the keys in your hand. So you really want to understand that during the home buying process, there's a lot of variables that you can't control. Like, for instance, if the home inspection goes horrible and you need to back out of the contract, or if the appraisal comes in low and the seller's not willing to negotiate, those are things that you really can't control. So you want to make sure that when you're buying a house, you have a plan where you go next. You never want to close on a house and then have your lease ending that same day. You want to have a contingency plan so if something goes south, that you have a place to stay. So one of the most common and costly home buying mistakes to avoid is assuming that your home will appreciate in value quickly. This is an outdated mindset rooted in the last decade of rapid growth and is not the reality in today's market, because here's the problem. Too many buyers treat a home like a short-term investment, and they assume that they could sell within 2 to 3 years and walk away with $50K in equity and use it to buy their next property. But here's the thing, markets shift, and in today's market, real estate is really a long-term investment. So you really want to keep the mindset that you need to keep that home that you're buying for at least 5 to 7 years in order for you to have enough equity so that when you go to sell, that you won't be losing money. And here's how the market has been shifting. So if you bought a home between 2020 to 2021, even before that, I mean, your equity in your home skyrocketed because the price of homes increased dramatically during that time period. But here's what's been happening for the last couple of years. So the market has increased a little bit, but not anywhere near as much as it did in 2020 to 2021. So you really want to make sure that when you're buying a home right now, you're thinking long-term and not short-term. You want to make sure that this home will work for your long-term goals. So buying a home in 2025 doesn't have to be overwhelming, but you have to go with it with your eyes wide open. These are not just small errors. These are the home buying mistakes to avoid if you want to protect your money, your future, and your peace of mind. So before you talk to a lender or make an offer, run your numbers, prep your savings, and set a game plan. That's how you avoid these regrets and buy with confidence. And if you like this video, then you're going to love the video that I just posted on how to pay off your mortgage 10 years faster.